Welcome to this Killick Explains video, and welcome to another Viewers Ask. And this time, topical again, people have been asking, what is a wealth tax? Well, might you ask the question. Lots of publicity on it, lots of rumours around the autumn budget and what may happen next, so let's get in there. Now, the background of this is what? If you are Rachel Reeves at the Treasury, then you are worried potentially, and what you're worried about is that government income is falling well behind government spending. You've got basically a mounting deficit problem, if you like. How do you solve it? Option one, borrow more money to pay for defence, hospitals, schools, civil service salaries, and so on. Problem with that is the bond market vigilantes don't like it, especially if you're a government that's already quite heavily borrowed. Option number two, spend less money. But on what? And what happens if your backbenchers revolt and say, no, you can't cut costs, you can't cut these benefits, okay? Raise more tax revenue. And that's where a wealth tax may fit into the picture. And as the name suggests, it's a tax on wealth. So let's get in there, look at some of the pros and cons. So what is it, first of all? Well, the exact mechanics vary. I'm going to give a very simple example in a moment, but in concept, it's a flat tax on the assets that somebody owns. All of them, property, shares, liquid, illiquid, easy to value, hard to value, based here, based anywhere else. And the rate you'll see floating around at the moment, for no particular good reason, is 2%. So I'm going to use that in a moment. So a 2% flat tax on somebody's assets. Now, the arguments for this are what? Because lots of Labour backbenchers, for example, are very much in favour. All right. Well, proponents say it's simple. I mean, what is not to understand about a 2% flat tax on somebody's wealth? All right. It promotes equality. People say, well, if someone's made a lot of money, surely what you should do is skim some of that off the top and redistribute it. All right. It sounds easy to collect. I'll come back to that point in a moment. I mean, how hard can it be? 2% of someone's wealth, write a check, off you go. And it's got a sort of a fairness element in a world where, you know, we're seeing headlines about Jeff Bezos' wedding and all the rest of it. It is perceived as being a fair way to go about things, solve lots of welfare problems and so on. But, all right, and there are quite a few buts, okay? And this is why, although wealth taxes have been tried in other countries, they've usually fallen flat on their faces one way or another, okay? Now, the disadvantages, first of all, there's a conceptual problem, which is that some people have a problem with the idea that essentially, if you think about who's got the wealth, it tends to be older people, all right? So you are effectively targeting someone in their later years, when in their younger years, if they're an entrepreneur, they've got the potential to earn the same wealth, but you're not taxing them. So some people think it's sort of societally unfair. It's got a bit of a lumpy timing in terms of collection versus something like income tax. The advantage of something like an income tax is you can basically say it's fair. As your income grows, you tax it. This thing just jumps in at one point in your life, all right, and says, we'll take a slice of your wealth right now, all right, for no particular reason other than it's sitting there waiting to be taxed. Valuation can be a nightmare, all right? If someone owns, you know, unquoted securities or property that's difficult to sell, it might be pretty difficult to get a valuation that everyone agrees with. You know, how many surveyors do you ask? Which one do you trust? And so on and so forth. Do you use a government surveyor for property? Do you use a commercial one? So it goes on. It can discourage saving and investing because people, even without a lot of wealth, will think, well, if you're going to tax it eventually, I'll just spend it. I mean, what's the incentive to ever save and invest? Liquidity can be a problem. You say to someone who's got difficult to sell assets, I need you to write a check for a wealth tax right now. They're like, well, how am I going to do that? Are you telling me I've got to sell assets that I currently own? For that reason, you get a lot of avoidance. You get wealthy people looking every which way to get around it, including, and not limited to, leaving the country and taking their assets with them, okay? And it's quite difficult to keep tabs on. So let's give an example. In case you're thinking, why is this a problem? Let's take an example of a 2% flat tax. An entrepreneur with 10 million of assets, which is a number that's been bandied around because they've built a successful business, and an income of £500,000 a year. All right. Now, let's look at their income for a moment, okay, from which this wealth tax is going to be taken, don't forget. So let's say they own £500,000. 45% existing higher rate of income tax would wipe out, say, £225,000 of that. Very simple, crude example here. Add a 2% wealth tax on 10 million, and that takes another £200,000 out of their income, which means their tax bill on £500,000 is now £425,000, which, if you were to do this every year, would be an 85% tax rate. Is that person incentivized to leave their business in the UK at that point? Arguably not. And these people are mobile and they do vote with their feet, okay? And some of them already have done, not on the basis of this, but on the basis of other measures introduced by the current government. So there's your problem. Then you've got the debate about, should this be a one-off or should it recur, okay? And that debate is nuanced, by the way. But basically, overall, you've got a very thorny issue. It makes headlines, okay? It does run the risk of putting people off, not just who are based here already, but imagine someone overseas thinking about relocating to the UK. Are they going to think twice if we introduce 2% wealth tax? I don't have an answer to that question, but I think there's a degree of rhetoric in the way I just put it, okay? And for those people thinking, no, we should try it here, why not? It has been tried elsewhere before, not with a huge amount of success for some of the reasons I've just flagged. Now, if you want to know more about tax, wealth taxes or otherwise, I'll conclude with my usual 3 sources of information at killick.com/resources. One is my other videos, the other is my guides, and the third is our quarterly magazine, Confidant.